Hello everyone, welcome back to Stock Spy. So in this video, we are going to break down the second quarter earnings for three major companies, Coke, Lockheed Martin and Texas Instruments. Whether you're an investor or just keeping up with the market, these updates will help you understand what's driving the businesses and where they might be heading next. We'll try to keep things simple, insightful and actionable. Starting with Coke. This is a name everyone knows. Whether you are sipping a Coke or holding a stock, it's a solid dividend. Coca-Cola reported strong profits in Q2, beating analysts' expectations on EPS, thanks to the price increase and better margins. But here is a catch. The total sales growth was modest. The global volumes actually declined. This means fewer bottles were sold, but Coca-Cola made more money per unit, mainly due to the higher pricing and strategic product mix. They are facing headwinds from foreign exchange rates and softening demands in some international markets, which management openly acknowledged. Still, the company reaffirmed its full year outlook and expected to grow the earnings by around 8%. For investors, Coca-Cola remains a solid defensive play. It's a reliable dividend stock with pricing power, which is great during inflation. But if you are holding it, keep an eye on the volume trends and international performance. Long term, it's steady, but short term, you may not see an explosive growth. Next up is Lockheed Martin, the aerospace and defense giant. On the surface, Lockheed Martin bet expectations for adjusted earnings. But dig deeper, it's a more complicated story. The company had to write down over $1.6 billion in project losses, mainly from classified defense programs, international helicopter contracts, and overrun on cutting-edge tech projects. This caused their official net earnings to drop dramatically year over year. Their cash flow even went negative this quarter, which is extremely rare for a company like this. Investors reacted quickly and the stock dipped on news. So for investors, Lockheed Martin is still on a massive $160 billion backlog. The global defense giant spending remains strong, especially given the geopolitical tension. But the earnings show that even established contractors can stumble when program execution isn't right. If you are a long-term investor, this could be your buy the dip opportunity, but only if the management shows signs of better oversight going forward. Finally, let's talk about Texas Instruments. They are one of the biggest analog chip makers in the world. Think about components used in cars, factories, industrial machines, not just flashy smartphones. Texas Instruments posted strong revenue growth this quarter. Beating estimate? That's impressive, especially since semiconductor industry has been going through a rough patch last year. Demands from industrial and automotive clients is showing signs of recovery. They also gave a decent forecast for Q3, which suggests that the worst of the chip slowdown may be behind us. While stock dipped in Bishop's cautious comments, analysts still see Texas Instruments as a key player in the next industrial tech wave. For investors, if you are bullish on manufacturing and infrastructure, Texas Instruments is a great way to play the trend. They are financially sound, focused on long-term margin improvements, and well-positioned for the eventual semiconductor rebound. Just know, it's a cyclical stock, so expect up and downs. So final thoughts, if you want stability and dividends, Coca-Cola is your friend. If you are okay with a little bit of volatility and long-term defense upside, Lockheed might be a smart pick. If you like to ride the tech cycle, Texas Instruments could be a solid rebound play. So a few tips before you go. Focus on the trend and not just the headlines. Earning beats are good, but quality and context matters. Watch for the free cash flow. It's often a better indicator than reported profits. Diversify across sectors. Consumer staples, defense, and tech serve different roles in your portfolio. And last, stay up to date each quarter. Management guidance tell you more than this quarter's numbers. That's it for today. If you found this video helpful, give it a like and subscribe to the channel for more videos like this. Let me know in the comments which of these 3 stocks are you watching or are you already invested in. Until next time, happy investing.